Hi guys, welcome to the SavvyMoneyShow. Me, your host Sean. We will be getting to Netlist, Amazon and GameStop later on, along with a few other companies. But we're going to start with some updates on companies I've gone into detail about before. So if you want detail analysis on it, maybe go back to those videos. These are just updates and what I think you can do. Now, Morrison's supermarkets, if you remember, when everyone was going into Tesco's, I chose Morrison's because it was better prepared for Brexit. It had the deal with Amazon for Whole Foods and Amazon Fresh. It also had a lot of UK branded stock, so it wouldn't be subjective to tariffs, and had a good dividend, which was over 3%, but now it's just under. And its finances was in good shape. Its price of sales was 0.36. It's a market cap of 6 billion versus 9 billion. And if we look at the news, we can see that Apollo is in talks to join Fortress in a bid for growth at Morrison. Now, it's a 6.3 billion market cap, and apparently they're going to put a bid in for 8.6 billion, which will pop it up by another more than £1 a share. And I think that would be a good value for it. Apollo, who are they? They were looking to take a majority stake in Asda the other year, and then instead of doing a solo bid for Morrison, who have over 500 stores, as well as manufacturing sites, as well as centre of excellences, this would be the best deal for them, in my opinion. And of course, it'll be the best deal for us as well. This would give us like £374 a share. So for those who got in when I said, which was about 180, 150, 180, and have held, done well. Sumo Group, well, what can I say but wow. 150 we got in this originally, and just wow, this was a growth stock, and I liked it because it didn't have debt, and for a growth company, a spec stock, as gaming stock, it was amazing. Now, as I said, I think it's close to profitability. Tencent was an investor. Now, if you haven't heard, Tencent are going to pick up this remaining stake in there. It's going to pay £5.15 for it. Oh, sorry about that. But which means you'll be making 19 pence on the current price, but it's already made quite a run up from when the news came out. This, in my opinion, is good. Again, is good value for Tencent. Is good value for the shareholders. Now, before this news, it hit highs of 330, 350. Also, the UK are being a bit fidgety about foreign companies coming in, so this may not go through, but I have a feeling it will. Now, if it doesn't go through, you can see the share price tank. Morrison's one is a better bet in my opinion. It's going to go up. If you're not in it, it's going to go up higher. And if it doesn't go through, you're still getting an undervalued company. Now, speaking about gaming companies, Corsair. I spoke about it when it was $40 a share. It's now under 30. I always said when it's under 30, it's worth loading the boat. It's got a P ratio of under 20. It's under 19 at the moment. And you can see here the market cap is under the enterprise value, only just. Its forward P is under 15, which is rare for a company in this sector. And a PEG ratio of 1.7, price to sales of 1.4. People are thinking that it's the accessories, the computer accessories market. I'm still looking at it that way. But it's the Delgado side that interests me more, the streaming side. Because that is big and it's just going to get bigger. And I think this is one that is going, that once it starts moving is not going to stop. A bit like Amazon did recently. And we'll get, as I said, we'll get to Amazon soon. Now, netlist. If you remember 2 weeks ago, we spoke about netlist, and we got into netlist. Don't tell me I got the top. Oh no, 9.5. No, well, not quite. 950. I pulled my initial investment at 950 with a promise if it come down, I'd go back in. I like to, when there's been a sudden jump like that, I always pull my investment because I know what's coming after. As you can see there, it's coming back down. Don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to £200, depending on the platform you use if you deposit a small amount. So what exactly is netlist? Well, what is the big hurrah going on? Well, basically, netlist has been in a long-standing legal dispute with Google, and the judge has confirmed that in discovery they can go all the way back to 2009. So where most things go back 3 years, netlist can open the books all the way back to 2009, which means that they can claim damages that Google owes them from 2009. They can do what Merck did against Gilead then and claim punitive damages, which would be treble damages if they want to go down that route. Although if you remember, when Merck did that, Gilead appealed after Merck won, and Gilead won the appeal, which might be what Google is banking on. Now, as I said, it ran up very fast, so I sold out my initial investment. It's coming down at the moment, so I'm going to look for a re-entry point because I do want to get back in with my initial investment. I am riding 3 shares at the moment, and if you're looking for a huge dip, this might be the dip. I don't think you're going to find a massive like 50%, 75% dip on this, because more and more people are finding out about it every day. Now, the thing about netlist, is most companies like Google try to wait them out so they go bankrupt. Why I don't think this will happen with this is Netlist have had someone back them and pay for the litigation. What that means is Netlist will not get 100% of any payout. A percentage of the payout will go to the company that's paying for the litigation. Also means there's someone else out there who thinks they have a strong case, strong enough to win. Now, we don't know the details of this, whether it's 10, 20, 30%, but it means it's less risk for Netlist. We also have the fact that Netlist have also had another case against someone and won. I believe it was 40 million, I'm not 100% sure on that, which should come out on their next earnings. And if we take a look at their current status, we can see that they don't look too overvalued for their sector, and although they are losing money, they aren't losing at a massive rate. Now, they've gone from liabilities outweighing their assets to their assets outweighing their liabilities. And as I said, they have another 40 million to go on top of that. It is a company that is on the OTC. The CEO didn't want to they was told by the NASDAQ he had to do a reverse split to stay on the NASDAQ. He didn't want to do that because he thought it would be harsh to the shareholders. The rumour going around is just a rumour, is that the CEO won't take anything less than 5 billion, and that damages would be in the area of 5 to 8 billion. Now, for every $1 billion, it would add of $4.50 to the share price. Now remember, this is $4.50 before they started doing all this, right? So you got to think of them as a dollar stock, and so if you could think of it as becoming a $25 stock if they get 5 billion, but then that is if everything goes well or if there is a settlement. The biggest settlement beforehand was the Qualcomm versus Apple, which was 4.5 billion. And I think the fact that Google has infringed on 50% of Netlist's patents gives them a good chance. I think there's plenty of things in Netlist's favour. But remember, HCMC had plenty of things in their favour. Philip Morris is still not settling. They're pushing it all the way. Why? Because these big companies tend to think they can lawyer themselves out of it. That's why they pay so much for lawyers. And the lawyers like to justify their pay by saying, yeah, we'll sort it out, and try to muscle their way with the smaller companies. And when it doesn't work, they kind of get themselves into a corner. Anyway, we'll see what happens. Now, we have GTech, or as it's known now, Avant Brands. And why did they change? Well, they wanted a rebranding, and they wanted to get away from GTech holdings, which I'm glad they did, because there were two GTechs on the OTC, and there were people who were mistaking it. As you can see here, their assets versus liabilities. I mean, look at that. You got from November, it was 40 million versus 12 million liabilities. Sorry about that. And now it's 60 million versus 3 million. The other reason why is because they said they're not the same company anymore. They've grown. They don't have the same board of directors. They don't have any more debt. You'll find out they've actually, all the promissory notes that they had, they have paid off. They've bought them up, so that saves them $1 million a year in interest. So when people are saying, why aren't they going out making an acquisition, making an entry into the US, that is the same as making an acquisition with none of the risk. So going debt free, saving themselves $1 million a year, and straight off the book. And now, going forward, they're stabilised. They've increased their revenue. Although the cost of revenue and cost of income has increased, their revenue has increased more than that, and they have, they had getting regular orders from Israel. I spoke about the Israel order before. They are just doing amazing, in my opinion, and this is a stock you should have in your portfolio. Now, you might want to check this out and have a look into it. I'm not going to put my details in just because you have data protection, but they're coming out with new brands all the time, and I think it won't be long before they enter the US market, and that's where the real money will be made for them. Now, we are going to speak about, can't really speak about GTech without speaking about Planet. Planet, I'm looking, when it hit $5, I was planning to average up, but I'm happy with my holding at the moment, and I want it to get under $5 if I do average up. I think it's an amazing company. I think it's well set, and I don't really want to do anything more unless it does come under $5, which I don't see too much. Palantir, I had so many people calling me a morons for selling out my initial investment. Now, I remember when I sell out my initial investment, I keep shares. Now, the thing is, look what's happened since then. Now, I bought back in at 21, and it's started to go back up. So, I haven't really lost anything. Tattoo Chef, as we know, we spoke about the Kroger deal, and it has announced the Kroger deal, but during the period in between, that was the pickup day where I doubled my position. And now, GameStop, people was in it because of the short interest. Apparently a short interest is only 15%. But in my opinion, GameStop will make a move. It's got the same kind of pattern. It will move sideways for a little bit and then it will shoot up. I could be wrong, but it's looking that way to me. Amazon. People look, oh, it's going down. It should always go up. But again, Amazon will come down a bit and then a little bit sideways and up again. So don't think it's just going to fall like a stone. It doesn't. Amazon isn't that type of company. Now we have the oil prices have fallen. So what am I doing? OIH, which is a ETF for oil. The second biggest holding is Halliburton and Enable. I spoke about Enable before. It has the 8% dividend. It's being taken over by Energy Transfer for 7.1 billion, and its price to book is 0.5. So even if it doesn't go through, of course you have Energy Transfer if you want, but these are the ones I'm looking at. And just so you know, for those dividend chasers of you, Persimmon goes ex-dividend on 22nd of July. And one other thing, apparently A1, they spoke about, Mark Forge has spoke about companies, 5 companies, competitors infringing on their patent. So you may get a case from there, but we've yet to see. I'll see you in the next video. Don't forget to check out links in the description below. You have until the 1st of August to be entered for the £1,500 portfolio prize draw with Freetrade. I'll see you in the next video.